Hello and welcome. Alan Knuckman here in Chicago at the CME Group, talking energy with the focus on crude oil. August crude today was somewhat quiet, finishing up a dime here today at 73.90. It dipped down to 72.99 before a comeback once again, an overall strong bullish market. The news wasn't really in crude today. It was more of the macro market march. We're seeing stocks continue to surge after that turnaround last week, a very strong week last week, a strong day on Friday, and some follow through today after the holiday week. We're seeing the markets up about 1%, but what I'm paying attention to is the S&P is closing in on that 2,800 top. Now, this is a market that's traded between 2,600 and 2,800 here for the last many months. So it's looking like it's trying to make an attempt on the top, and that could be a positive as far as the overall markets go, taking some of the fear factor out of the markets. Really what's keep an eye on is the dollar. The dollar in the last weeks has moved up to that $95 level, which has been a resistance top, a resistance wall up above. Now, the dollar index has been strong in 2018 after a straight out decline in 2017. So the question is this for real, or is this was just an oversold condition that will correct itself? And a declining dollar obviously helps out commodities and oil. We saw the euro currency make new 3-week highs here recently, so it's had a bit of a U-turn, bit of a bounce. We're up to the 118 level once again, with 120 a key level to focus on. Let's get back to crude. Crude seeing a price pause. So last week, it was last Tuesday that we made those 4-year highs at 75.25, pulled back a little bit, saw some unwinding and some profit taking. That's understandable, obviously. We had more than a 15% straight up move in 10 sessions. So the market did back off. It pulled back down to $72 on Friday, but it's regained its footing once again. So if you do the math, the measured move target on this, the distance of from the highs down to those recent lows on Friday, if and when we can move back up to 75.25, a full V recovery, that target's 78.50. Now, that's been the technique that we've been using here over these last sell-offs over the last years. Every time we've seen a sell-off, it's bounced back and made new relative highs, and it's actually increase the distance of that sell-off. So it will happen until it doesn't, but that's something to keep an eye on. So net looking at crude oil, you've got to respect the overall bull market, not driven much by fundamentals here at this point. You're seeing a technically driven market, and you're seeing a bit of a relief in some of these other markets as the tariff fact comes into play and stocks are stabilizing. So on the downside, focus on $70 psychologically is an important support level, and then we just talked about those highs at 75, and the markets will give you a clue where it wants to go next. Alan Knuckman here in Chicago.